Stocks found some love today, bought the dip, and we ended only down about 0.5% for the S&P 500. That's not too bad. The risk radar this morning I updated after being gone the last, I don't know what, since Wednesday. Hopefully I left you in a decent place. I had two main points before I went on vacation last Wednesday, which was regime change. Looked like it was afoot in markets. Wasn't sure which direction. The higher highs in the S&P 500 mid last week looked like the green light for stocks. But then after a fake breakout, we're back yellow on stocks and a lot of other changes here for crypto and bonds. This is what I was looking for answers to, and we're starting to get some of them. Picking direction on charts. So as we dissect the sell-off, let's first start with the narrative around the economy, which is very important. Kind of the baseline explanation I've been hearing is that because of a few soft economic prints, and I think also the Walmart number 2 suggesting that tariffs could have some blowback, is leading to a little bit of a growth scare. And when you're dissecting market sell-offs, it is important to start with that general baseline, that kind of top level. Is this an inflation scare or a growth scare? And between those two, it's definitely more about a growth scare. But I don't think that fully explains it. It does help us make some headway on figuring out the sell-off, though. So firstly, look at Walmart here in blue next to the E-mini futures. This is back to Walmart earnings. So when they talk about tariffs maybe having a blowback effect and they're not being omitted from that, and that maybe their customer will slow down a little bit, anything along those lines is more about this very strong economy slowing down. So it's not a coincidence that stocks basically peaked alongside Walmart. That's number one in the argument for this being more of a growth scare. The second is the bond market. If you look at the 2-year yield, yes, we've had a rally in long bonds, but the rally in the short end is probably even more important because it just had a really big swing. Before I left, I was talking about how the 2-year yield was looking up at the higher end of its range. That's a blue line, the 2 years, and then they flip right back around. Now, the 10 years had quite a bit of volatility, and the move was obviously substantial for the 10s, but the 2s tells us a message, which is that as recently as almost a week ago, the market was thinking 0 cuts this year and possibly maybe hikes would enter the dialogue. That is completely reversed now. So yes, there are some elements here in the market between Walmart, the way we responded to that, and bonds suggesting it's a growth scare. That being said, though, in the last 3 years, basically every time since COVID we've had a growth scare, it was a buying opportunity. That's where I think what's more important right now into trying to figure out what comes next or how to trade this is more about the short-term fluctuations in valuations and the kind of Trump euphoria that was getting built into this market. Very important are the charts of Tesla. Very important are the charts of NVDA and cryptos. The NVIDIA one is important because it suggests some of the excitement around AI still is taking DeepSeek into account and how that might have disrupted some of the narrative. Now, you can argue both directions, I think, on DeepSeek. Here's the gap for DeepSeek. Here's the way we filled the gap and then came back around. So the technical situation for NVIDIA doesn't look great. Obviously, we know they're a beast and a monster, and the numbers are going to be huge this week, but relative to expectations, of course, that's anyone's guess. Volatility potential still is in NVIDIA's chart, so that's very important. And that gets us to the final point, which is what the crypto market signals. It's doing what it always has done. It's selling off more than stocks after it went up more than stocks, but it goes in the same direction. And now with MicroStrategy, this giant levered nuclear just element that has potential for massive blowback effect, means this is where you go to figure out if there are animal spirits. If you're willing to take a risk in crypto at this point with MicroStrategy ticking time bomb ticking underneath you, all the narrative that the president's going to put Bitcoin on the balance sheet, and that hasn't happened yet, there's a lot of expectations then that have potential for letdown. So that's where you want to watch for signs of deeper risk appetite coming off. I warned that MicroStrategy and Bitcoin looked like it would lead the way down again. It has, and there's a lot of message about expectations for policy-wise that haven't come true yet. I'll see you tomorrow.